So, Andrew, in light of these unusual times, many of us are really aware that Congress got together and passed a bipartisan bill known as the CARES Act. Now, this particular bill is really unique because it provides for major changes in our distribution options and rollover options for our 401ks or IRAs. And it also has expanded the loan provisions in our retirement accounts as well. But do you really understand this for yourself? And if not, this video is going to go into details of how you may benefit from utilizing some of the provisions provided by the CARES Act. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to make the difficult and stressful process of retirement income planning simple.
Absolutely, Andrea. And we do this by incorporating a team of expert advisors ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals to help our clients get a fully written retirement plan. It's going to let them know when, where, and how to take money from their retirement savings.
For the best retirement income planning advice, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So, Andrea, we know by now that COVID-19 has come in and interrupted a lot of things for a lot of people. It halted a booming economy. It cost millions of people their jobs and their financial security. But fortunately, Congress did get together and implement this rule known as the CARES Act that will allow millions of people to extract up to $100,000 from their retirement accounts. But Andrea, as with all good intentions, if you decide to take advantage of this new law, there could be some side effects that your retirement may experience as well. So what we're going to talk about in this video today are three main aspects of the CARES Act. We're going to talk about what is a CARES Act distribution, when do you have to pay back a CARES Act distribution, and how might a CARES Act distribution affect your retirement if it's not paid back properly. But before we do that, there are two rules to retirement income planning that we always want to give you. And what are those two rules, Andrea?
Well, rule number one is to never run out of money, and rule number two is to never forget rule number one.
So let's talk about the CARES Act in your retirement. So let's go ahead and talk about what is a qualified CARES Act distribution. By definition, a coronavirus-related distribution is a distribution that is made from an eligible retirement plan to a qualified individual from January 1st of 2020 to December 30th of 2020, up to an aggregate limit of $100,000 from all plans and IRAs. So this is a total. So you can't take $100,000 from one plan and $100,000 from another plan. So who actually qualifies for this type of distribution? You, a spouse or a dependent who was diagnosed with COVID-19, if you've been furloughed or laid off or having work hours reduced. Also, if you have a business that you own and you've had to have a closing or you've had to reduce hours of that business, you also qualify. One thing to make sure that you keep in mind is that there is no 10% penalty on any early distributions under the CARES Act. Or if you're taking money from a 401k, there is no mandatory 20% withholding. Very important that you understand that. So when exactly do you have to pay back a CARES Act distribution? Let's talk about that because that's really important. So when do you pay back this type of distribution? You have a 3-year period in which you have to pay these funds back. So for example, let's say you take a distribution of $12,000 from your 401k. In 2020, you can report $4,000 on your tax returns. And in 2021, you can report another $4,000 on your tax returns. And in 2022, you can report $4,000. You can also report the whole $12,000 on your tax returns this year if you like. So how might you go about paying back a CARES Act distribution? Well, you can repay all, as I mentioned, all $12,000 back, or part of the CARES Act distribution to any eligible retirement plan. So you can pay it back to your 401k or new 401k. You got to make sure that your plan will allow that, or you can pay it back to an IRA as well. As long as it's done within a 3-year time frame, you're going to be able to pay those funds back without having any type of taxable situation with those funds that you took out. So how might a CARES Act distribution affect your retirement? This is the part that's really important that I want you to understand. So what about taxes, right? After a 3-year period, the taxes on any of that distribution will come due. So let's take a look at this. Let's say, for example, you decided to take out the max that you can do with the CARES Act distribution. You take out $100,000. If that money is not repaid before 3 years, you may now face a tax bill of $20,000 or more. So you really have to be careful there. Another aspect of how this may affect your retirement is, what about the earnings on that money that you've taken out of that retirement plan, right? That money isn't making money for your retirement. That's really important. And if that money is not making money for your retirement, that's going to be less capital that you're going to have to produce income in your retirement. And we know how important it is to make sure that you have enough income so you can retire with confidence. So according to a recent Forbes article, a typical individual who defaults on a 401k loan loses about $300,000 of financial security at retirement because of taxes, penalties, and of course foregone returns on their investments. So it's really important for you to think about, do you want to take a distribution from that retirement account if you really do not have to? So the moral of this story that I want to give you is that you want to make sure that you exhaust all other possible options before you decide to embark on a CARES Act distribution, because it could negatively affect your retirement. So I hope that the information that I shared with you is really going to allow you to make an informed decision on whether you should actually take any money out of your retirement accounts due to the CARES Act. If you have any questions or comments that you would like to share about the information that I just shared with you, please leave them in the comment section below, and don't hesitate to get in touch with our office.
After this video, check out our other videos that we've created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.